Hey guys, what's up? So pretty much, I'm semi new to M1 Finance, and I thought I'd make progress videos going forward on my progress with using this website, and so you guys could see my portfolio and how it's doing over the course of the series, and you guys could get a little taste for M1 Finance yourself. So a little backstory: I started in March 2018. I put in $100. That's a minimum that you could put in for M1 Finance, just to see how it was, and I pretty much kept it in for a little over 2 months. I only had like four stocks in my portfolio at the time. I was mainly just doing it to try it out and see if I liked the service. But on May 6th, I put in $200 on $2,000 on top of the 100, and from then on I've pretty much been steadily pumping in like $200 each week. And I also separated um, my stocks into different sectors. So at this point right now, I have three different sectors. They're pretty wide ranging. It's REITs, dividends, and growth stocks. With the growth sector, I'm pretty much trying to do a dividend only portfolio, but with the growth right now, I have to still fiddle with it, but all of as you'll see in a couple of minutes, all these stocks in here don't give dividends. Some do, but about half don't. I'm planning on changing that. This was when I first made the account. Most of the stocks were only growth stocks, so I kind of just kept them so that I didn't have any capital gains, and just grew the portfolio from there. But that's definitely still subject to change. Um, so what I'm gonna do is I'm gonna go into each of these slices and show you the stocks that I have, and then as we progress, I'm obviously going to change some stocks out, keep some stocks. You could see how well they've been doing or how little they've been doing. But before we do that, I want to talk about up here. So on $4,300, I have a gain of $137 over the course of a couple of months from March 18th till now, which is July 4th. And of that $137, 119 of it is market gains, and about $20 is from dividends. So I don't think it's that bad. The dividend side, I'm actually pretty surprised that it's already $20 in the course of a couple of months, and that gain is 8% on that $4,000. So 8% definitely isn't bad for a couple of months worth. But yeah, let's get into the actual slices. So pretty much this slice is subject to change from about here down. I'm not too sure about these, especially since two of them are mall stocks, and I don't know how malls are going to really be doing going forward. But we're keeping a close eye on it, and they're definitely subject to change from my portfolio. So definitely keep an eye out on these going forward. But Realty Income is probably my favorite stock in the whole portfolio. They pay a monthly dividend, and they're they're a dividend aristocrat, and they're pretty stable with their price. It's going up steadily. Some days it goes down, but then it always picks back up and results in a gain. So they're easily my favorite, as you could tell by the 35% within this REIT slice. And then LTC Properties, they're a healthcare REIT, so you always need healthcare. They're a great share to have. And then Equinix is they hold data centers, and obviously a lot of companies are using data centers to hold their servers and all that stuff. So they're definitely going up too. But these these bottom ones. This one's a casino one, so casinos are probably always going to be around, but they're definitely going to have the most changes to them, I think, in the whole portfolio. I still have to research different REITs to get, and maybe I'll just reduce the whole REIT slice to maybe just 5 or something. But yeah, so $32 gain with $2,000 in this slice alone. And out of that 32, I have $11 worth of dividends, which is really good. REITs usually give the most dividends since they have to dispose of 90% of their income if they want tax benefits. So that's about right. Moving on to the dividend side of the slice. So my dividends have been doing really good recently. They're pretty much all blue chip stocks, but they're doing a lot better than I expected. So out of 1,700 in this slice, I have a gain of 104, and of that, $6.43 are dividends. So that results in that whole gain results in pretty much a 9% yield, which is really good. Amgen is, the one that I have the most percentage in, and it's doing the best, 10, or one of the best, second best, 10.54%. And then Waste Management, which is a waste company, they're up 11.63%. So they're pretty boring stocks in this one, but it's, what gives dividends, and what's, a lot of these are dividend aristocrats. 1, 2, I think Johnson & Johnson, and then People's United, which I just added recently. This is what the estimated trade is for. I did a little change here. I'm also putting in $600. So, but yeah, I changed this one around a little bit, the percentages, to fit in People's United. But this one's pretty much set in stone with everything here. The percentages might change a little bit here or there, but I don't really expect to sell any of these stocks in the near future. They're all blue chips, so they're pretty much here to stay. And then my final one, which, like the REIT, is probably subject to change as well. So I have Amazon at 30%. Originally, I had it at 45%. But I'm trying to get rid of stocks that don't give dividends, and obviously Amazon is one of those. So pretty much I'm going to stick, in the future, my goal is to have all my growth stocks to be dividends only as well. So Costco, Walmart, Qualcomm, and Disney all give dividends. Uber, I know what you guys are thinking. Why do you have Uber? It's just a small percentage, 8%. I figured, what the hell? Why not, try putting it in here and seeing what happens. Only $40. Tesla, that was my biggest mistake. I put Tesla in here a while back, and pretty much ever since I did, it just, the stock went down a lot from what I bought it at. I bought it at $254, and it's just been going down since. So that's also another one that I'm planning on getting rid of. I'll probably keep Uber, even though they don't give a dividend, but it just for, seeing what happens in the future, and it's a low percentage yield. Maybe I'll bump it down to 5% just, to have it. But Disney, Qualcomm, PayPal also doesn't give dividends, but with Venmo and all their acquisitions that they made, I think they're going to go up in price. I kind of think they're a little cheap right now. So I'm probably going to keep that too. But like I said, pretty much I want to keep this limited to as many dividend stocks as I can. Sure, I'll have a few just regular growth stocks in here just to try and, get some capital gains. But the whole point and strategy of this portfolio is strictly just to maximize my dividends with as little risk as possible. I know REITs have a lot of risk associated with them, but I'm trying not to go for like mortgage REITs and all those high risk REITs for a higher yield. I'm trying to keep my yields to be, somewhat on the conservative side, like 4%. LTC has 5%. Equinix has 2%. So we're not going for like 13% or 20% REITs or anything. We're trying to be as conservative as possible while also maximizing our gains and dividends. But I hope you guys enjoyed. I hope you guys liked this first episode. This was more of like an all-inclusive, trying to get through all of my slices and stuff. I hope for the next few episodes I could really like drill down into, maybe we'll just go with like REITs for one episode or just dividends for another, and really drill down to my thinking on why I picked up each of these stocks. And maybe we'll go into some news in the stock market and all that stuff. But stay tuned. Leave a comment if you guys have any suggestions or comments that you guys want to get across to me. I'll check all the comments. But for now, hope you guys enjoyed, and I'll see you guys in the next episode. Peace.